Gold probably goes down a bit initially. To the extent this war continues doing what it's doing, I think it is initially negative for gold, but I think gold will bottom. And I think it's a really important relationship to watch, right? Because exactly what you just said is what everybody's watching for, which is okay, war on, gold down, war off, gold up. And I get that initially. But the longer it goes on, there is a day coming where we're going to say war on, gold up. All the business I do in yuan, I'm going to be buying gold for. I do think silver is wildly mispriced as an industrial metal today. And I also think it is an Achilles heel of sorts of the credit gold and credit silver system. I think physical holders of silver will be rewarded over time just because, again, when you look around at everything we're trying to do, we're trying to build redundancies to the industrial base that China has built. All of that stuff can't get built with paper silver. It's got to get built. There's silver is just used in so many different places. You can see declassified documents from U.S. State Department that China's buying gold because they see it as a way to kill two birds with one stone and build their own resilience. 5, 6, 7 years. Now, in gold terms, I think if you have an issue, gold probably goes down a bit initially, and we've seen that. And so that I don't have as strong a conviction in that. We've already seen gold well off the highs. And so maybe gold goes down a little bit in that initial risk off in the dollar denominated equity markets. But then ultimately gold soars. And as the decline in equity markets necessitates, creates dysfunction in treasury markets again, and necessitates more dollar liquidity injected by either Fed or Treasury again. And gold goes back to new all-time highs. And so on a dollar base, I think you get sort of the Nike shape in equities. And then on a gold basis, I think you end up with the chart, more of what we've seen since 2022 and since 2000 really, which is on a gold basis, equities. That's where the correction in equities has been, and where I think it will continue.
Let's talk about gold because it's been following the same pattern since the war began, selling off as it started. It rises when it looks like peace might be on the table, then falls again when it seems like the war is full on. I've spoken to a few different people about this. Some people say that's normal during a conflict. That's just people looking for liquidity. We saw Turkey sell a large portion of its gold holdings. People speculate that was to purchase energy due to the issues in the Strait of Hormuz. What are your thoughts here on this pattern gold has been following? Because the other side says that, well, in a global conflict of this magnitude, we should see gold's status as a safe haven kick in and prices go much higher. I wonder how you're reading the situation.
What if the biggest opportunity in gold and silver isn't today's price move, but the global financial shift happening behind the scenes? Macro strategist Luke Gromen believes the monetary system is gradually changing. As central banks continue buying gold, government debt climbs to record levels, and geopolitical tensions reshape global trade. He says investors should pay attention to the long-term trends, not the daily headlines. Here's what his latest analysis means for gold and silver investors.
Yeah, I think that's exactly what we've seen, which is there's been some reserve selling for energy, for liquidity. No question about that. There's been selling of, alongside treasury bonds as well, for reserve selling / liquidity. And I also agree with the point that if you get into a global, a real, not just because I don't think we're going to get a world war per se. It's possible, but I don't think that's what we're going to get. But if you just get what everyone's saying we're going to do, which is sort of an economic divorce between China and the U.S., then gold has to soar because China's not going to use the yuan and run deficits in yuan, even if they could. But they're not going to. They have set up offshore yuan clearing banks in every major gold hub in the world. So London, Switzerland, Dubai, Singapore, Hong Kong, and of course Shanghai, where if you end up running surpluses against the Chinese or you have excess yuan by virtue of trade with the Chinese, you can recycle those yuan surpluses into gold at any of those places. And that's how China's going to internationalize the yuan. They've been very clear about this for 10 or 15 years, and the West just continues to generally ignore this because they don't want to hear it, because they don't have a trump card for it. So to the extent this war continues doing what it's doing, I think it is initially negative for gold, but I think gold will um, bottom, and I think it's a really important relationship to watch, right? Because exactly what you just said is what everybody's watching for, which is okay, war on, gold down, war off, gold up. And I get that initially. But the longer it goes on, there is a day coming where we're going to say war on, gold up. And that's a really important day because that will be the day where people go, okay, fine. This is going to last for a while. I need to do some of my business in yuan. I need to do some of my business in dollars. All the business I do in yuan, I'm going to be buying gold for and shifting any surpluses in yuan that I earn into gold. And that will be a really big moment. And I think that is ultimately how this war ends up. It ends up backfiring on the U.S. in terms of if part of this was done to enforce dollar hegemony, all it's going to do in the long run is accelerate its end.
And are you watching the silver market here as well? Do you ascribe to the view that silver is basically just a junior version of gold? Or do you think its industrial and strategic attributes put it in a separate category? Because obviously we saw the massive rise into triple digits at the start of the year. Silver moved very far, very fast. It's now come off of those highs greatly. So I'm wondering how you see that market unfolding and how you view silver versus gold.
Yeah, I do watch it a little bit. I'm not totally as deep in it as I am in the gold market. And I have a small position of silver. I bought probably $18, maybe, I don't know, 8, 10 years ago. I do think silver is wildly mispriced as an industrial metal today. And I also think it is an Achilles heel of sorts of the credit gold and credit silver system that does support the post 1971 dollar system. So it does have monetary elements. And when I mean credit gold, I mean the unallocated silver and gold derivatives that basically when demand kicks up for something, there's two ways you can address it. And in particular, when there's demand for gold and silver that picks up, there's two ways you can address it. You can allow the price to rise and physical to move, or you can allow unallocated derivatives to expand and address that supply and let price stay still. And generally speaking, over the last 50 years, the latter has been how increases in demand for gold and silver have been addressed. I think physical holders of silver will be rewarded over time just because, again, when you look around at everything we're trying to do, we're trying to build redundancies to the industrial base that China has built around the world. Us, Japan, Korea. Maybe the Europeans will really finally get their act together in certain energy stuff too. Who knows? But the point is that all of that stuff can't get built with paper silver. It's got to get built. There's silver is just used in so many different places, especially as it relates to anything EV slash electric, solar panels, etc. So I think physical holders of silver will be rewarded over time, but I don't know if over time is 2 months, 2 years, 2 decades. I would guess it's probably within 2 years, but I don't have a strong feeling on that.
There's a lot of hyperbole about the end of the fiat currency system coming up ahead. A lot of people have talked about it on this show. It does feel like we could be reaching a breaking point of some sort as the debt and deficits become completely untenable around the world. The cost of living crisis is accelerating. I hear all sorts of opinions from, we can keep kicking this can down the road far longer than people realize, to the US dollar is going to hyperinflate at some point in the near future. We'll be forced back onto a gold standard. And of course, everything in between. I'm wondering what your take is on the potential end of the fiat currency system and the return of gold to the monetary system. Does one have to happen for the other to happen, or could both potentially, could fiat currency still maintain its status as a monetary asset and gold be reintroduced into the monetary system in some form or another alongside it?
It's a great point that you just made there, because people like to make it black and white and be very hyperbolic about it, but like most things in this life, it's shades of gray. So gold has begun its return into the system as a neutral reserve asset.
Luke Gromen believes gold's short-term pullbacks are often driven by liquidity needs, not a loss of confidence in the metal. During periods of financial stress, governments and institutions may sell gold to raise cash. But if economic conditions weaken and central banks inject more liquidity, he believes gold could resume its long-term uptrend. He also argues that China has spent years expanding gold's role in international trade, while central banks continue increasing their gold reserves. Rather than predicting the end of the U.S. dollar, Gromen believes the global monetary system is gradually evolving, with gold becoming a more important neutral reserve asset. For silver, Gromen is equally optimistic. Growing demand from AI infrastructure, data centers, electric vehicles, solar panels, and defense technologies continues to support physical silver, which he believes remains undervalued. His message is simple. Focus on long-term trends like central bank buying, rising debt, de-dollarization, and industrial demand, not short-term market volatility. And that brings us to his biggest takeaway.
We're at least 12 years into that shift, at least. And you can see that. You look at global FX reserves, dollar reserves have not really moved in 12 years. Treasury bond reserves have been flat for 12 years, and gold reserves have risen meaningfully. So central banks have been growing holdings of gold and not growing holdings of treasuries, while treasury supplies have been growing exponentially for at least 12 years. So this is already 12 years underway. And I've been very clear that I think the post 1971 structure of the dollar system is ending, but the dollar's not ending, and I don't think it will in my lifetime, or really even my kids or grandkids, not that I even have grandkids' lifetimes. It's changing. It's changing to a neutral reserve asset, gold, that floats in all currencies. And everybody wants this. The PBOC came out in 2009 and said we want to move to a non-credit-based, commodity-related, currency issued not by any single country. It's gold. And then they started buying gold a few years later, much more aggressively. And you can see declassified documents from U.S. State Department that China's buying gold because they see it as a way to kill two birds with one stone and build their own resilience. The IMF came out in 2011, said we should think about moving away from dollar monopoly of oil and instead move it to something like an IMF SDR and price gold and oil in IMF SDRs, not dollars. Say think what you will of it. The Dominic Strauss-Kahn, who was in charge of the IMF when that was proposed, ran into a sex scandal and was removed from office 3 months later. Moving on, World Bank, former Treasury official Robert Zoellick, 2010. We need to move to a system where you have the goal, or excuse me, of euro, yuan, or euro, yen, pound, and dollar, and a yuan that starts to open up its capital account. And we should also use gold as a reference point for inflation expectations, growth, etc. And then most recently, and perhaps most importantly, because we are the incumbent in control of the past system, the U.S. has been talking about Hamiltonian economics. Besant gave a speech at the New York Economic Club 4 weeks ago. He, same day, posted a Wall Street Journal op-ed on the same topic, that Hamiltonian economics back Trump's economic statecraft. The Hamiltonian economics theme echoes what U.S. Trade Representative Jamieson Greer said in January at Davos, saying we're done with the old system. The United States is moving to a Hamiltonian economic system. Vance and Trump have alluded to it as well. And so the key here is that you can't do a Hamiltonian economic system with the post-1971 structure of the dollar. You just can't, full stop. Because Hamiltonian economics is we're going to put up tariffs, and we are going to implement industrial policy. And when you do those things, you don't emit the dollars needed for the system to run. So the world goes to gold. So to me, what Besant said, 4 weeks ago, everyone on Wall Street virtually is like, Besant is the adult in the room, et cetera, et cetera, et cetera. Besant's telling you the gold's coming back in the system. That's what he's telling us. When he says Hamiltonian economics are backing our Trump's economic statecraft, that's what's happening here. So now, what does that imply? That implies much higher gold prices. That implies a much lower trade value of the dollar against the creditor currencies like the yuan, the yen, to a lesser extent the euro. And that would be a system that would lead to perhaps the greatest economic boom worldwide since the end of World War II.
How does this debt and deficits, not to mention the entitlement spending, ever get resolved? Because obviously this is a debt that's essentially by design not going to ever be paid off. Is there some way that they can sweep this under the rug? We've heard all sorts of theories from they'll introduce a central bank digital currency and somehow they'll be able to manipulate the numbers and get things working in their favor again under a new financial system. They'll just keep inflating the debt away. They're in an inflate or die situation. But you've pointed out, as of many other people on this show, that there's really no way out of this issue for the United States government at present. How do you see things as they currently stand today when it comes to debt and deficits? And how do you see it playing out? Can this can keep getting kicked down the road indefinitely?
There appears to be a game. So ultimately, it's just a currency issue, right? If the currency weakens enough, and in particular against gold, the U.S. can pay off its debt overnight, right? At whatever, I don't know what the number is. It's probably 20, 30. Well, it's a lot more than 20,000 an ounce, but some big number per ounce of gold. U.S. can, the Treasury Secretary can instruct the Fed to revalue the gold. Boom, we pay it all off with devalued dollars, and debt holders lose, and the government wins, right? So that it can always be dealt with. It can always be floated. It's a political question. When does the sort of, the preferred game plan for 40, 50 years has been slow financial repression, right? So, the debt grows 8% and 8% CAGR since 2008. We say inflation is 3 and we pay 0 to 2% on the rates and we try to earn our way out of it. And that is the preferred way of doing it. The problem is that was supposed you have to have some level of austerity on the back end. If you just keep spending 8% more money every year, you're never going to catch up. The other problem with that is you had a finite time horizon for that, because ultimately one of the great lies has been, the entitlements are not debt. And they're not technically until they go from off balance sheet to on balance sheet. And them going on balance sheet is just a function of boomers turning 65. And 70 million boomers were born from 46 to 64. Stands to reason most of them are going to reach age 65. This is not a surprise. And so they have, and those, so that's the reason why the debt growth hasn't slowed down, is because the off-balance sheet liabilities came on balance sheet. So really, it's just a political question. The preferred method is just financially repressed, but then you can do that until the politics start to get weird. And that ties back to my prior point. We're now years into the politics getting weird. If financial repression wasn't happening, Donald Trump never gets elected. If financial repression wasn't happening, Obama probably doesn't get elected. And if this isn't Trump, what I would mark as the first, okay, we have a political issue. The financial repression playbook is beginning to drive political issues. That was kind of the starting point of that.
Luke Gromen's message is clear. Don't let short-term market moves distract you from the bigger picture. If today's monetary trends continue, gold and silver could play an increasingly important role in the global financial system over the years ahead. Do you agree with Luke Gromen's outlook? Or do you see a different future for gold and silver? Share your thoughts in the comments below. If you enjoy in-depth analysis on gold, silver, investing, and the global economy, subscribe, like this video, and turn on notifications so you never miss our latest market updates. Thanks for watching, and we'll see you in the next video.